Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Chart that we're looking at, by the way, it's a 15-minute chart with daily pivots. I'll explain what you're looking at, though. You're not looking at your traditional pivots. You're looking at the person pivots, which this particular platform is Thinkorswim, TOS, and Thinkorswim has my filtered pivots. We have a mathematical calculation in there that helps us derive under what condition, if it's bearish, then we should see these particular support and resistance targets. And that'll help me to say, hey, at the end of the day, we're still kind of bearish. At the end of the day, it's giving us an indication we're kind of bullish because notice the resistance is higher than the prior time period's resistance. At the end of this day, it's telling us here's what the potential low is and here's the potential high. The market condition is still bullish because the high is higher. And it gave us this day and said we should see an expanded range, and that's what we saw today. So person pivots, or at least using the filtering method, is one way that can help you micromanage your trades, micromanage against the longer-term macro scene. So if you are longer-term bullish right now from a seasonal perspective, then using daily pivots can kind of help you to micromanage your position. Now let's take a longer-term look, and we're going to use a daily against monthly, or excuse me, in this case we're using weekly pivot point analysis with a daily chart. When I'm using pivots, I use a daily pivot for intraday trading. So I'm using daily pivots, and I'm using like a 15-minute chart. If I'm using end-of-day data, I'm not using the daily pivots, I'm using the weekly pivot analysis. And I'll also use the monthly, as you'll see in a moment. But notice that at the end of last week, we had an indication of the potential high being up here in the ISE's Euro FX index. And the potential low for this particular week is going to be around 73.84. Now, I don't know if we're actually going to see that, but we certainly look at our charts and say, hey, there's other prior highs up in here. So potentially we could see this Euro currency index trade down to the 75, but certainly as it hit 80, I definitely don't want to be on the long side of the Euro FX index. I want to be looking at buying possibly put options in this marketplace. Now, this is actually the spreadsheet so that you understand if you're not, or if you're new to options, that they do trade in 50-cent increments, which was kind of interesting. Now, notice that I did say that today, and I'll back up a slide for you, that we're trading at around 77 and change, all right? So we want to look at 77 because that's our strike price. So on our left side of our screen is our calls, and on our right side of our screen is put prices. Now, these are November options. You probably would want something a little bit more further out. November, I believe, has 16 days till expiration. You'd want to look maybe at December. But if you're a short-term trader and we think the momentum's here, if there's a catalyst out there, catalyst like, well, I don't know, a presidential election, let's say, that could cause maybe further dollar strengthening, I'd want to be buying. If the dollar rises, then we're going to see the Euro FX index go down. And so what would an area of realism be? For the month, possibly 72 to 73. But for an options trader, looking at another class we'd have to give is looking at the deltas on these. I wouldn't want to mess around with these particular options. But I'd look at something possibly in the realm of maybe a 76 versus a spread, a 76 versus maybe a 74, and looking at the bid and asks here, 46 to 71, 106 to 131. Those are pretty tight spreads. I'd be looking at possibly a anywhere around 60, 70 cents for that spread and giving myself 200 points if in the next 16 days the market is below 74. So, or even if that's the case, I'd be profitable if the market even got down below 75. So you got to be able to do one or two things. What's the market condition and what's the realm of reality that the market can get to a place within a prescribed period of time? So looking at options and looking at using seasonalities and, more importantly, combining that with candles and pivots can certainly help redefine your not only profit objective, but your risk-reward ratios. Now, the Japanese yen, I'd like to move forward, and we are going to make time for you for questions at the end of this presentation. I think it's important that, for the people that are here today, maybe you've already had enough of the election. Maybe you've already made up your mind. I'm here in Chicago, and it's kind of a historic day. There's going to be this little celebration down here in Grant Park. I will not be attending for whatever reason. As a Republican, they didn't send me my invitation, but in any event, you got to be good humor about it. May the best man win, they say. In any event, looking at the Japanese yen and knowing that today is a presidential election, hopefully just like the last election, unlike the last election, hopefully we should get the results within the next few days and not string this out for the next few months. Uncertainty certainly is not good for market conditions. And I think once that the election's over, we know who's in, who's out, what's going on, who won the Senate race, who's going to win the House race. The market will adjust itself. But over time, here's one thing that's kind of important. Seasonalities don't lie, regardless, over time. Okay? So every year, kind of interesting to note that on or around the middle of June, the Japanese yen goes down into middle August. From about middle August, the market rallies and makes a seasonal high on or about the second to third week of October. That's important information. As well, notice that it makes another decline going into about the first week or the last week of November, the first week of December. So the Japanese yen actually has kind of different spikes in the market from a seasonal perspective. The Japanese yen has probably more spikes because there's a lot going on with the yen. The yen trades as a partner against China. They're in competition, right? The Japanese yen in the Japanese economy certainly is a net importer of raw materials. They trade, obviously, against European currency. The euro-yen is across. And as far as seasonalities and different fiscal year-end conditions, and as well as the U.S. against the Japanese yen, there are different tides working, different forces working with the Japanese yen, and it's kind of important to understand that if we're in a time period that the Japanese yen goes down, that I probably don't want to look at buying opportunities. If we're in a time frame where the yen goes up, I want to look at buying opportunities. I want to take advantage of these seasonals. And this area in here, and I'll erase that because I got pretty happy with the drawing.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.